Netflix winning the bidding war for Warner Brothers Discovery this morning, a huge transaction worth $72 billion.
The combination of Netflix and Warner Brothers creates a better Netflix for the long term. It sets us up for success for decades to come.
I don't think Netflix is buying Warner's for the stock value. They've got that. They're the growth stock. What they need is to grow subscribers and to grow the overall audience. And they see the intellectual property and the library that Warner's offers as being pretty important. This is going to be a very difficult regulatory process for this transaction. The industry is not excited about this. I mean, my DMs and texts blew up last night with some pretty dour messages, because anytime you take out a buyer in the entertainment ecosystem, it results in fewer opportunities. Now, Netflix would argue that they're going to be stronger and they're going to grow more and they're going to have more opportunities for talent to work on bigger and better projects. But the history of the business has shown that when you take out a buyer, you reduce opportunities.
If you think about Netflix, the engagement has stagnated a bit, and I think one of big investors' biggest concerns has been, why is engagement not growing faster? This is sort of an acknowledgement that Netflix is looking at this going, there is so much underexploited IP in this company. And I think they're looking at this as, how do they use Warner Brothers to re-accelerate the overall engagement growth and time spent? There is just so much stuff. I really believe this is all about the IP, and Netflix is looking at this as, how do we take this library and make 1 + 1 equal way more than 2? This is going to be great for consumers. I mean, there's no doubt about it. You're going to get a lot more content at low pricing. Like, that is clearly going to be the messaging, I guarantee, from Netflix. Lots of content, shorter movie windows. Like, this is going to be very consumer friendly. Obviously, Hollywood's going to have to kind of get their minds around it.
I think when you have Netflix, which is the largest streaming company, acquire this kind of power in an $83 billion deal, they're paying that price for a reason. When you're looking at a deal like this, you're thinking about, how does this affect the producers? How does this affect creatives? How does this affect actors, distributors, content creators, content funders? I can't overstate the fact that as state enforcers, certainly in addition to the federal government that are going to be looking at this deal, they are looking at the fact that when this deal closes, if there is an impact on the number of stories that get told and the types of people that get to tell those stories, that is a harm to our market, and that is a harm to the economy and to the American people that should be credited.
We've already been talking to people at the federal level, at the state level, and internationally, because this is a significant threat, we believe, to the long-term viability of theatrical exhibition.
This is a very risky bet for Netflix, and even riskier bet for Warner. When you're a seller, the only thing that matters more than price is certainty of closing. And when you have this kind of regulatory risk across so many different dimensions, federal, state, in terms of domestic, but also international, on top of all the filings that are going to take a long time, there's a tremendous risk that Warner won't close the deal.